Hello, Assalamu alaikum. I'm Bilal and I'm here for audit and assurance demo. So, how are you? So, let's get started. First of all, let me give you an introduction. My name is Bilal and I'm teaching from in accounting and I'm teaching from 2011. I have qualified my ACCA in 2011 and to that I'm teaching from 2011. I have taught ACCA, CMA, CIA and I'm giving online education from 2011. I also give physical classes. I belong to Pakistan, Karachi, and I'm working as manager audit in a textile firm, and I'm working from almost 8 years. So let's get started. First, we will just look at the syllabus, so what we have to cover in this paper. Okay, when we talk about F8, first section is section A, where we will look at audit framework and regulations. Okay, what is the audit framework? First, we will study concept of audit and other assurance arrangements, engagements. Then we'll just study the external audits, the part, how the external audits are done, what is the difference between internal audit, external audit. Then corporate governance, just code of ethics and all. Then professional ethics, ACCA code of ethics and conduct. What are our code of ethics? We will study here. This is not that much important, but we'll study it. Then we have planning and risk assessment. Obviously, the main work for the internal audit is to assess the risk. So first of all, we'll be looking at the planning stage, then assess the assessment stage. First is obtaining and accepting continuing audit engagements. How to obtain it, how to accept it, and how to continue it. We'll just look at the audit engagements and what are the risk procedures in that. Then objective and general principles. What are the objective and the general principles in that? Then assessing the audit risk. What are the risks involved during the audit? Then understanding the entity and its environment and the applicable financial reporting framework. What is the when we start audit for the company? Okay, now we should understand the entity and the environment and the application of the applicable financial reporting framework on that company. Then what are the fraud law related fraud laws and regulations? Then what are about how we'll plan the audit? What will the documents required? This we'll study in planning and risk assessment. Then we have internal controls. Okay, system of internal control. Then use and evaluation of system of internal control by auditors. Then obviously the most important, the TOC, test of controls. Okay, and the communication of internal control, the internal audit and governance, the difference between external audit and external audit, internal audit, the most important. Okay, then 1 second. Then we'll be looking at internal controls. Then we have section is audit evidence. When we get audit evidence, what it should be like, the assertions of the audit evidence and the audit evidence, the audit procedures, audit sampling, other means of testing, how to test them. Then the audit of specific items, how to audit the specific items in the financial statements, and the automated tools and techniques. What are the what automation is also very important nowadays. So what are the automated tools and techniques to auditors for the audit evidence and the work of others, how to use the work of others, how to use the work of experts, and what are the not-for-profit organizations, what differences are there when we talk about the profit organization and not-for-profit organizations, how to audit them. Then we have review and reporting. Okay, subsequent events, how to review that, how to report that going concern issue, how to report that, then written representations, audit finalization, the final review, the independent auditors report. Okay, and now as every paper has its sections, the employability and technological skills, how to just do your paper skillfully. Okay, now moving towards the book and moving towards the chapters. Okay, let's go there. Okay, first our chapter is about assurance engagements. We'll just start it. Okay, we'll just first we're discussing the topics, discussing the 2-3 chapters, then we'll just solving the kits, so we are well prepared for the exam at the same time. and we can test our knowledge. So what we have studied, we are trying to, where we'll just transmit that in the exam questions. If they are achieved, so it means we have done good. So first of all, what its chapter is, Introduction to Assurance. Okay, what are the assurance engagements? First, we have two types of assurance. We can give reasonable assurance and we can give limited assurance. Okay, reasonable assurance and the limited assurance. Okay, when we talk about reasonable assurance, there are some statutory audits, because obviously they are statutory, they are by the governments. So we cannot give absolute assurance. We will also only give the reasonable assurance. Okay, and statutory audits, and then we are saying free from material misstatements. They are free from the material misstatements, and it represents a true and fair view. And when we talk about limited assurance, we are talking about limited assurance. There are different review engagements which we have. So we will give limited assurance in that. So we have two of them, that is limited assurance, reasonable assurance. Okay, now moving forward. What is assurance? Assurance, when we talk about the specific definition which is given in the framework, this is a more confusing, but this is a framework definition, so we have to study it. An engagement in which a practitioner obtains sufficient appropriate evidence. Sufficient appropriate evidence, this is a word is important. Sufficient appropriate evidence in order to express a conclusion designed to enhance the degree of confidence of the intended user. Enhance the degree of confidence of the intended users other than the responsible party about the outcome of the evaluation or measurement of a subject matter against criteria. Okay, this definition is also very confusing, I know that. Then because it's framework, then we just go through it again. An engagement in which a practitioner obtains sufficient appropriate evidence. Practitioner means us who are doing the audit. Okay, we just obtain the sufficient appropriate evidence in order to express a conclusion. We will express a conclusion designed to enhance the degree of confidence. This will enhance the degree of confidence of the intended user, means the shareholders other than the responsible party, that about the outcome of the evaluation. What is the outcome, how we evaluate it, and what is the outcome of that, and the measurement of the subject matter. The measurement, how much we can give sufficient evidence, subject matter against the criteria, whatever the criteria is. Okay, now just going towards the easy meaning. Giving assurance means offering an opinion about specific information, so the users of the information are able to make confident decisions. What is the purpose of engagements? That the user of the financial statements can make easily, he can make confident decisions about the risk, which the information can be incorrect. They can get confidence that the information they are reading is correct because somebody has checked it. Okay, and a professional has checked it. So the information being incorrect, risk of the information being incorrect is reduced. Okay, this is what assurance means. Okay, assurance engagements, what we are doing. Okay, now moving forward. Now we talk about the 5 elements of an assurance engagement. What are the 5 elements of an assurance engagement? First is 3-party involvement. Second is appropriate subject matter. Third is suitable criteria. What we are studying, elements of assurance engagement, and the sufficient appropriate evidence, and the written assurance report in an appropriate form. These are the 5 elements of assurance engagement. Okay, now what is the explanation for it? 3-party involvement. There will be 3-party involved in this assurance engagement. First is the practitioner, the reviewer of the subject matter who provides the assurance, it means the auditor. The intended user, which is the shareholder. Okay, and responsible party, which is being audited, is called directors. Okay, then appropriate subject matter, the information subject to examination by the practitioner, which is in some cases to financial statements. Then what is the suitable criteria? The subject matter is the evaluated against the suitable criteria. How we are checking the financial statements? We will have the financial reporting framework, IFRS. We are comparing that these statements are as per the IFRS or not. Now, the fourth is sufficient appropriate evidence. What is the sufficient appropriate evidence? Sufficient appropriate evidence is needed to provide a basis for the opinion and calculation. Obviously, when you're doing some working, so if you have said something that this statement is wrong, so you must have an backing for it. That is called sufficient appropriate evidence. Okay, it will provide a basis for your opinion and conclusion. Sufficient appropriate evidence is obtained by performing audit procedures. Obviously, we'll just get them during the audit. Then written assurance report in an appropriate form. Then after that, after are you working, we have a written assurance report. The output of the assurance engagements expressing a conclusion opinion about the subject matter. What is the subject matter? What is the conclusion? We'll just give that. That is called independent auditor's report, providing an opinion as to whether the financial statements give a true and fair view. This is the international framework for the assurance engagements. Now, we have a illustration that consider someone who is buying a house. There is a risk in that someone pays a large sum of money to purchase a structurally unsafe property, which needs further expenditure to make it habitable. To reduce risk, it is normal for house buyers to pay a property surveyor, the practitioner, to perform a structural assessment of the house, the subject matter. The surveyor would then report back, written report, to the house buyer, identifying any structural differences measured against building regulation, best practice, and other criteria. With this information, the potential buyer can make their decision whether or not to buy the house with the confidence that they know its structural condition. In this example, the responsible party is the current house owner, and the evidence would largely be obtained through visual inspection of the property. Okay, this is the example of an assurance arrangement, excluding the audit. It means you are buying a house and you want that you buy a house which is obviously totally safe. So we just hire a consultant to check that whether this house is safe for living. The structural changes are good. The pillars are, and the every aspect from technical aspect, this house is safe. So we hire a consultant. So this consultant is a practitioner, and the house owner, previous owner, is the party, and we are the beneficial. We are the stakeholders. We are the shareholders. Okay, in this example. Okay, so now moving forward. Other examples of the assurance engagement include audit of the financial statements, review of the financial statement, system reliability reports, verification of social and environmental information, review of internal controls, value for money audit in public sector organizations. These are different assurance engagements audit firm may be asked for. Okay, first, audit of financial statement. This is normal engagements. Okay, it could be a review, it could be a system reliability report, what our systems are running, verification of the environmental information, review of the internal controls, value for money audit. Okay, general principles the assurance provider must follow when performing such engagements. When you are performing such engagements, we must follow these principles. What? Comply with the ethical requirements. Obviously, there should be some ethical requirements in every engagement. You have to comply with them. Apply professional skepticism and judgment. Perform acceptance and continuous procedures to ensure only work of acceptable risk is accepted. Okay, we have to continue our process, perform acceptance and continuous procedures to ensure only work of acceptable risk is accepted. Okay, you have to just do it at the planning stage. When you're obtaining the engagement, you have to just check that we are accepting an acceptable risk. Okay, agree to the terms of engagement, comply with quality control requirements, plan and perform the engagement effectively, obtain sufficient appropriate evidence. You cannot say anything without evidence. Consider the effect of subsequent events on the subject matter. What will be the effect on the subsequent events? Form a conclusion expressing the either reasonable or limited assurance as appropriate. Okay, the evidence should be documented to provide. Obtain sufficient appropriate evidence, consider the effect of subsequent event, form a conclusion expecting reasonable assurance. The evidence should be documented to provide a record of the basis for the assurance report. Obviously, the evidence should be documented. Types of assurance engagement. There are two types of assurance engagement are permitted. You're allowed to give two types of assurance engagement. First is reasonable and the second is limited. We studied at the start of the chapter. Now we talk about the reasonable assurance. Okay, first reasonable assurance, and from the aspect of the practitioner, gathers sufficient appropriate evidence to able to draw reasonable conclusions, concludes that the subject matter conforms in all material aspects with identified suitable criteria, gives a positively worded assurance opinion, gives a high level of assurance confidence, performs very thorough procedures to obtain sufficient appropriate evidence, TOC, and substantive procedures. We are talking about the reasonable assurance. Okay. Then we just look at what is the difference between limited and reasonable. Now, limited gathers sufficient appropriate evidence to able to draw limited conclusions. It was talk about the reasonable conclusions. Now we are talking about the limited conclusions. Okay. In limited assurance engagements, we will give limited assurance, limited conclusions. Concludes that a subject matter with respect to identified suitable criteria is plausible in circumstances. Okay. In plausible circumstances. With here is saying it confirms all the material aspects. Now, plausibleness, there it is giving a reasonable assurance in that, and this is a limited assurance. They're plausible in circumstances. Then gives a negatively worded assurance conclusion. Here we are giving a positively worded assurance opinion. It gives a negatively worded assurance. We'll just read the conclusion. It will be clear. That gives a positive and it gives negative. Then gives a moderate or lower level of assurance than that of an audit. It gives high level and it gives moderate level or low level. Okay. Then performs significantly fewer procedures, mainly inquiries and analytical procedures. Okay. It does not include TOC, test of controls, and substantive procedures. It performs significantly fewer procedures, mainly inquiries and analytical procedures. Now, what is the opinion written? Let's read that. In our opinion, the financial statements gives a true and fair view or present fairly in all material aspects the financial position of More Company at December 31, 2004, and its financial performance and its cash flow for the year then ended in accordance with the IFRS. Then this is a positive opinion, positively worded opinion. Then there's a negative worded opinion from here. Okay, nothing has come to our attention that causes us to believe that the financial statement of More Company are not prepared in all material respects in accordance with an applicable financial reporting framework. This perfect example that this is a negatively worded opinion that nothing has come to our mind, nothing has come to our attention. Okay, the confidence inspired by a reasonable assurance report is designed to a greater than inspired by a limited assurance. Obviously, when you have a reasonable assurance report and a limited assurance report, the confidence level would be different. Therefore, there are more regulation standards governing in reasonable assurance assignment. Okay, when we talk about the reasonable assurance assignment, there are more regulations. The procedures carried out in reasonable assurance alignment will be more thorough. You have to go more in depth. The evidence gathered will need to be of higher quality. So, in both cases, you have there are three differences when you're working on the limited assurance arrangement and the reasonable assurance report. So more regulations are required. In the reasonable, procedure will be thorough and the evidence gathered will be of higher quality. Okay. Now, our last topic for the demo class, that is external audit engagements. External audit is an example of reasonable assurance engagement. Okay. Obviously, this is thorough. So this is a reasonable assurance engagement. The purpose of an external audit engagement. ISA 200 overall objectives of the independent auditor. The conduct of an audit in accordance with the international standards or auditing states the purpose of external engagements to enhance the degree of confidence of the intended user in financial statements. Intended users in the financial. This is achieved by the auditor expressing an opinion on whether the financial statements give a true or fair view are prepared in all material aspects accordance with the applicable reporting framework. So this is achieved by auditor expressing opinion. It gives a true and fair view and is prepared in all material aspects in accordance with the IFRS framework. True and fair view. True. factually correct information, which confirms with the accounting standards and relevant legislation and agrees with the underlying records. The records are correct, that their impact is correct, and they are as per the accounting standards. Fair means clear, impartial, unbiased information which reflects the commercial substance of the transaction of the entity. It provides commercial substance, not the legal form only. What is the legal form and what is the substance form? That is different. Okay, which substance form it in its true spirit, that it does not only includes the mere legal form, it's present a fair view, which is very important for the intended user, means stakeholders or shareholders, whatever. The objectives of an auditor are to obtain a reasonable assurance whether financial statements are free from material misstatement, express opinion whether financial statements are prepared in accordance with the acceptable financial reporting framework, reports on financial statements communicate as required by ACCA. Okay. Third, the objectives of the auditor are to obtain reasonable assurance. Okay. Financial statements are giving free from material misstatement. Financial statements are prepared as per the IFRS, and the report on the financial statements communicate as required by ACCA in accordance with the auditor finding. Okay. Need for an external audit. Why there is a need for? Shareholders provide the finance to the company and they're not involved in the day-to-day operations, so there is a risk. So that's why I need an external opinion. Directors manage the company on the behalf of the shareholders in order to achieve the objectives of the company, normally the maximization of shareholder wealth, because directors are managing it and they are on the behalf of the stakeholders, shareholders. So there must be someone independent who is checking on them. Okay, director must prepare financial statement to provide information on performance and financial position of the shareholders. Directors have various incentives to manipulate the financial statements. They can manipulate because their incentives are dependent on it, their salary is dependent on it, their performance is measured. So we need an independent check. Hence the need for independent review of the financial statement to ensure that they give a true and fair view. In most developed countries, public quoted companies and large companies are required by law to produce annual financial statements and have them audited by an external auditor. Companies that are not required to have statutory audit may choose to have an external audit because the company shareholders or other influential shareholders want one, and because of the every company is not required to have an auditor, but some companies voluntarily just choose to get audited because to get confidence from the shareholders. And the second option also, some banks say that you must get your financial statements audited to get loan. So they also hire auditors of higher level to get loan. Okay, the benefits of an audit: higher quality information, more reliable, reputation of the market will increase, independent scrutiny, reduce the risk of management bias, frauds, and enhance the credibility of the financial statements. Okay, it will enhance, which I told you that bank will give loan if your financial statements is audited, and the deficiencies in the internal control system may be highlighted by the auditor. He can help us in just identifying the gaps. Okay. Now, expectation gap. Some users incorrectly believe that an audit provides absolute assurance that the audited opinion is a guarantee that the financial statements are correct. This and other misconceptions about the role of an auditor are referred to as expectation gap. Auditors do not give an absolute insurance. Some think that they give an absolute insurance that if the statement is audited, it is correct. This is not like that. So this is called expectation gap. Examples are a belief that auditors test all transaction balances. They test on a sample basis. Okay. Obviously, the auditor comes at the year end, so he does not audit all the transactions. It is on a sample basis. So some things can be missed. Auditors are required to detect all fraud. Auditors are required to provide reasonable assurance that financial statements are free from material misstatement, which may be caused by fraud. Okay. So do not detect all frauds. Some may be, it can be undetected. Okay. A belief that auditors are responsible for preparing the financial statements. This is the responsibility of management. The auditors do not prepare the financial statements. So they are not the responsibility. This is the responsibility of the management. Limitations of an audit. Financial statement includes subjective estimates and other judgmental matters. Obviously, auditor cannot check everything. There are subjective estimates as well, and the internal controls may be relied on, which have their own inherent limitations. Internal controls all have their inherent limitations. Representation from management may have to be relied upon as the only source of evidence. Some areas you have to believe the management. Evidence on often persuasive, not conclusive. They are not itself conclusive. So it can be wrong as well. Do not test all the transactions. As we told, they are working on a sample basis. Auditors provide reasonable assurance, which is not absolute assurance. The limitation of audit means that it is not possible to provide a 100% guarantee. They are not providing the 100% guarantee. Okay. So we will just keep it here. Okay. Then we'll, inshallah, move forward for more classes, inshallah. Okay. Thank you. Jazakallah. Assalamu alaikum.